You just heard in our podcast on the impacts on investments that making wise investment decisions requires a lot of information, knowledge, and imagination. So let's challenge our imagination by trying to identify the impact the weather could have on investments. Imagine the following situation that we hope will never happen. A hurricane devastates a substantial number of oil platforms in the Gulf of Mexico, where more than a quarter of the US oil and natural gas production is located. What is the impact on which types of investment? First of all, the oil companies that own the devastated platforms will not be able to produce and to sell oil for a long time. Their profits will go down, and so does the value of these companies, which makes that the stock prices of these companies will fall. Insurance and reinsurance companies that have to indemnify the oil companies for the damages will see their profits drop substantially. The value of these companies will go down as well as their stock prices. Stock prices of suppliers of oil platform infrastructure, however, will very likely rise because investors expect that these companies will benefit from lucrative contracts to rebuild the destroyed platforms, increase their profits and their value. Further to this, the destruction of production capacities that cannot be compensated by other facilities leads to a drastic reduction of oil supply. While the demand remains unchanged, the reduced offer makes prices for oil and fuel shoot up. Oil companies that have not been affected by the hurricane will benefit from the rising prices. They can sell their oil at higher prices and increase their profits. Their stocks will rise. On the other hand, companies that have to purchase large volumes of fuel at the higher prices, like airlines for example, will see their operational costs increase and their profits drop. Strongly rising fuel and heating oil prices have also a negative impact on the purchasing power of consumers. They'll have to spend a greater deal of money for fuel and heating oil and have less money left to buy consumer goods. So the turnover, the profits, the value, and the stocks of companies that produce or sell consumer goods will probably go down. If the oil prices remain at a very high level for a long time, this situation can result in a real energy crisis. Companies can get into difficulties so that they have to lay off part of their workforce. Rising unemployment figures tend to harm consumer mood and to slow down economic growth. This will lead investors to expect company profits and company values to decline in general. They'll sell their shares and look for alternative investments, which make stock prices go down. This is definitely not an exhaustive list of all the effects that can be produced by one single event, a heavy hurricane for instance. But it shows you how complex relationships between different economic sectors can be, and how difficult it is to draw the appropriate conclusions from specific events.